afternoon, everyone, and welcome to Stock Market Today. Ali Quorum and Ed Carson here with a look at the action in today's session, where we saw market conditions continue to deteriorate today, Ed.
Yeah, all the major indexes finally undercut their January 24th lows. We've been waiting for it. Here it came. We are going to take a look at Boise Cascade, which looked like a safe stock. It just got hammered today. Then we have Public Storage that actually did reasonably well, and Axcelis, which is at least setting up reasonably well.
Okay, well, let's take a look at those. But first, let's analyze current conditions and take a look at those key technical levels that we're watching. So here's the Nasdaq Composite, which finished the day down 2.7% at 13,037, below, as you said, Ed, that January 24th low at 1394. We also had the S&P 500 down 1.8%, the Dow down 1.4%, and the Russell down about 1.8% as well. So talk to us about the significance again of where we ended up today.
Yeah, I mean, look, the January 24th low is like the ultimate defense of the market rally. That's where the market rally started, that low. All the major indexes got underneath it, and it really matters for the S&P and Nasdaq because they're the ones that followed through. The S&P just did it by a point, I believe, like literally, so it did undercut, it did get there. So that just shows you how all those gains we had in late January, early February are gone. You can see the relentless selling we've had over the past several sessions. A lot of those were in higher volume the prior sessions, so the higher volume distribution days. We had several days ago undercut the follow through day lows, which was an indication when that happens, very strong odds that the market rally will undercut its ultimate lows. We've been saying you should be more defensive. It becomes even more so. There's no real support now for the major indexes. I mean, maybe I guess technically at 13,000 for the Nasdaq, but they're all sort of at their lowest levels since May or June. Not a whole lot there. I mean, it can stop at any time, but there's no obvious levels really that come out. There's this. We could go a lot further, especially in the current conditions. The whole fear of missing out, you should just be that fear of joining in. This is, if the market turns, there's just not much upside. There's just not much upside. If it goes up, how can you trust it? There's so much that it would need to do to feel confident in this market again.
Yeah, I mean, you want to be having FOMO in good markets and strong markets, not in weak markets like this. But what this does do is give us more time for proper chart patterns to form. That was one of the hesitations that we had when we did get that follow through day, was the fact that we weren't seeing a lot of those setups that we typically do during a follow through day, or at least the right sides of bases and the kinds of stocks that we follow very closely. So this will maybe give those stocks a little bit more time to form those proper bases. And like you were saying, the warning signs were there. Not only that undercut of the follow through day, but that immediate resistance that we had just a few days after the follow through day. And the next move up, we were also signaling caution. Hey, this could be resistance here. And any moves to the upside that we've seen have been short-lived. So we want to see something that's more sustained. We want to see those stocks that are actually setting up and breaking out in a big way. And we're not seeing a lot of positive signals right now. So it's going to take a lot for us to feel more confident in the market.
Yeah, and so it's just going to take time, and there's just no reason to force it. Let's wait until there'll be opportunities. It may not be for till next month, several months. It could be very soon, but you just want to wait until you get those signals.
Okay, well, let's also just take a quick look at the Dow undercutting its January low as well. And the Russell 2000, here's a look at IWM, not undercutting that low quite yet, but taking a big hit today. Also taking a big hit, quite the cascade, if you talk about today's decline for Boise Cascade, which heading into today's session was showing a lot of relative strength, a low PE stock here, Ed, but a 20% plunge on earnings. So that is very indicative of the kind of market that we're in.
Yeah, I mean, we've talked about, watch out for the high PE stocks, and those have certainly been hammered. But being a low PE stock doesn't mean you're going up or that you're going to hold up. It was looking good. Lumber prices have been strong. They beat earnings. The growth was strong. They seem to make some comments about, hey, lumber prices could be volatile, which to me sounds almost like boilerplate. But obviously, analysts and investors took something wrong out of this report. And this is just how hard you can hit. This was really a surprising move, how hard it is. But yeah, it's this kind of market, when bad news or any kind of perception just gets absolutely creamed. Home Depot, which is sort of like the other end of the lumber market, that one got crushed yesterday because people are a little worried about the guidance. Again, not the PE wasn't as low, but we're not talking about an expensive stock. And it's just that kind of market where it's very hard to find safe havens, or that safe havens that last.
And another telling thing about the current market is the kind of stocks that are getting the blue dot today, Ed. If a stock closing at the end of its trading range for the day is getting that RS line blue dot, Public Storage is hanging in this base structure here, but a disappointing finish for what was seemingly a strong start to the day.
Yeah, when it opened, in a better market, we'd be saying, hey, this looks actionable. It's clearing resistance. Look at that strong gap up, accelerating growth on the revenue side. There's a lot of things to like about it. It's impressive in the rising rate environment that a REIT could be doing well but this doesn't have an especially big yield. So I guess it's more of a growth story, but here we are. It's definitely something you should watch, but it is sort of like public service announcement. Almost nothing looks good right now. It's when a stock can close at the lows, tumble back below the 50-day line, and have the relative strength line skyrocket. Yeah, really, really says more about the market than this stock. Keep an eye on it, but don't be jumping into this one right now.
Yeah, not a buy here. And we do want to be keeping RS line blue dot stocks on our watch list, though, because now is not the time to check out of the market. We want to be staying engaged because, as you mentioned, conditions can turn very quickly. So seeing those stocks with the RS line blue dot, maybe some of those will go on to continue to strengthen and set up and present an actionable opportunity when we get the market to cooperate with us as well. And let's also take a look at Axcelis, ACLS, semiconductor equipment stock, working on a base here. And it was our stock of the day today.
Yeah, and again, this shows you the conditions that we're in. The market, the stock is falling. It's sort of got not the greatest looking base. The handle's getting weaker. It doesn't look as bad on the week there, but RS line blue dot. The growth is accelerating on the revenue side and triple-digit growth on the earnings side. So something to watch. I would definitely suggest, this is one of those times, hey, you're not going to be doing as much trading. Do some research on some of these. We've got a stock of the day. Read up about it. What the heck does this do? It feels like the market has been, they've been hammering the knees. So, and ACLS, you've got seems like a pretty good name for stocks to be looking at. So this may not work out. Okay, right. Like exactly, because a lot of these stocks might go down, but this is definitely one to be watching. Just reading about these quality stocks right now, and some will work and some won't, but you want to be ready.
Yeah, and you mentioned the handle. I feel like if it gets really any deeper than this, I don't know. You don't want a handle to end up being too deep or too long in time. But what are your thoughts on looking for proper setups at this time, where stocks are in relation to their 50-day line, tight action as well? What are you looking for in terms of setups for your watch list, Ed?
I think you want to look at more like that strength of the volume. You're seeing the accumulation, the relative strength. I guess it'd be sort of like this. You expect everybody on TV to look nice and presentable. They're all things. But if we're off camping and everything's a little rough and ready, people start looking a little scruffier. But you don't say that's weird. And that's the kind of market we're in right now. It's sort of like, this stock looks a little scruffy, and obviously you'd like it to shape up a little bit, but
understandable given the condition.
Understandable given the condition. It's out there rough and ready a little bit. Other stocks are doing double bottom, so it's like instead of a double bottom, it's got a deep handle, which is better. They can both be in there, so it's not ideal, but it would be almost weird to see good-looking stocks, stocks that have really pristine-looking bases in this kind of market.
All right. Well, great point there, Ed. And we can always count on you for an analogy to help us really make sense of what's going on. So that's always appreciated. And thanks everyone for tuning in. We will, of course, be back tomorrow morning with more on IBD Live. Can't believe tomorrow is already going to be Thursday. It's been a quick, short week. And coming up on Friday's IBD Live, since we had the Monday holiday, we will have Scott St. Clair. We didn't let him get out of paneling on IBD Live this week, so he'll be joining the team on Friday. And we hope you all tune in, investors.com/IBD Live. But we can't jump too far ahead because Thursday's show is going to be great too, Ed.
I certainly think so. I mean, I'll be hosting that. I think we'll have a lot to talk about. Let's just put it that way.
I think so. I think you might be right. All right, everyone. Thanks for tuning in. We'll see you back here tomorrow. Have a great rest of your day.